So with this, I just like to show, because I'll do buyers consultations and they'll say, oh, the market's crashing right now. And I'm like, no, it's not. Let's take a look at the numbers. And so we'll look at these stats from, year over year, we'll look month over month, just to kind of take a look at the different trends, because I feel like there are some indicators here that show a change in the market, but we're not seeing like this huge crash. And if you're getting into the market expecting that, I think you're going to not have a good time, because the numbers just aren't showing that just yet. So you can see here, we really had a spike in March. I mean, median sale price being 1.6, that's pretty outrageous. But you can see that we're not having some dramatic change in price month over month, at least. And then when you take a look here, I like to compare year over year, because I feel like that shows a better trend, because just, annually, month over month, there are good, hotter times to buy, colder times to buy. And so there's kind of like a wave there. So let's look year over year. When you consider August, I mean, interest rates are the highest they've been in a long time. So we would see an impact now on the purchase price, right? Because buyers are having that immediate effect on their ability to buy ultimately. And you can see year over year, we're still up just under 4%. We're still showing appreciation. And so I just really like to outline that to people that, we're not necessarily going down at this point. There's probably going to be a bit of a give, but like I said, I think it's going to be more gradual than anything else.
Yeah.
And then another indicator that I notice is median days to sell. Previously, oh my gosh, you had to be on it. Properties were selling within a week. And if they lasted 2 weeks, that was only because it was a set offer review date, but that was really rare. And you can see that this is an indicator, because it is on an upward swing. 18 days is not a long time to get an accepted offer. So properties are still selling relatively quickly. It's just not that cutthroat situation that we were experiencing before. And then I like to look at the sale price to list price ratio. And this is the lowest that it's been in a long time at 100%. But properties are still selling generally for what they're asking for. And that's why I like to, bring this up to buyers is, hey, if you're expecting like a screaming deal, meaning not selling for listed price, that's not necessarily going to happen. Now, sale price to original price ratio means that there was a price reduction at some point, because this is slightly lower than the previous one that we had just seen. And as far as months of inventory, I like to look at year over year, because that's usually a month indicator, right? There are, higher inventory months, lower inventory months. So this is year over year. And, in 2019, we had 3 months of inventory, 2018, 2017, close to that as well. And in 2022, we still have, less than 2 months of inventory. What that means is, how quickly properties are being absorbed by the market. And generally speaking, 5 months is considered a neutral market. Having 2 months means we have low inventory. Again, just setting the right stage, like we have low inventory and we still have a strong buyer demand, even if their budget is being affected. But the key one here is price reductions, because I feel like that's the biggest piece that has increased kind of dramatically since the interest rate increase. And you can see in May and June was when all of a sudden there was like a big push where we just had not seen that previously. That was kind of like the biggest shock, in my opinion. And we've continued to have an increase. And I think what's happening is, sellers were still hoping to get these pie in the sky prices, when for the first time in a long time, buyers were able to say, you know what? I'm not interested. Where buyers previously were doing anything they could to get their foot in the door, now they're saying, actually, this is not the house that I want, and I do not want to make it the house that I'm looking for. I'm going to move on. And so they're having to correct. That's what those price reductions are indicating, in my opinion. Okay, so something else I like to look at too is expired, canceled, and withdrawns, which is the market's rejected them, right? For some reason or another, they did not sell. And so I like to look at year over year to see if there's kind of an outlier in our particular situation right now, or if it's kind of the trend. And so you can see here, there's not a huge increase. We're seeing an increase for the market that we were just experiencing, but year over year, it looks relatively typical. And then here, I like to just kind of check overall stats year over year to kind of give you a big picture. The biggest change that you'll see is the price reductions, but everything else pretty much looks par for the course, except for the fact that we've appreciated so much. And this is just to indicate market health in general, how many properties are coming on the market, how many are going pending, right? Like how many buyers are ready, willing, and able to actually make the jump and buy versus how many actually close. And you can see we've got a pretty healthy market. Properties are selling, they're going into contract. And from my end, I'm seeing a steady demand of buyers. I'm doing, plenty of buyers consultations, showing plenty of houses, we're successfully writing offers and getting them accepted. And we're also being just a little bit more creative with our offers. I'm telling clients, ask for what you want.